Let us see the next question. A company had the following balance sheet as on 31st of March 2021. So we have been provided with the information: equity share capital 75 lakhs of rupees 10, that is 7.5 crore. Profit or loss account balance, that is reserves and surplus, 1.5 crore. 15% debentures of 15 crore. So with this we'll get the interest amount. Current liability is 6 crore. This is the liability side of the balance sheet. On the asset side, building is given 12.5 crore. Stock, debtors and bank balance is given 3, 3.25 and 5. That is the way we have been provided with the assets of the company. The additional information is given as under. Fixed cost per annum, it is rupees 6 crore. Highlight the portion, it is excluding interest. So we have been provided, this is the operational fixed cost. Variable cost is 60% of the revenue. Total asset turnover ratio. This is a new information for us. This information is basically going to be understood by us more in detail when we are going to do the chapter of ratio analysis. Income tax rate 40%. I just explained this to you in 2 minutes of time. You are required to calculate and comment earning per share, operating leverage, financial leverage and combined leverage. This is a question asked in July 2021 examination as question number 5. It was asked for 10 marks. I request all of you to go through the question and then we'll discuss how to do answer. Let us have understanding that say how to do answer. Dear students, the new information that we have over here is total asset turnover ratio. I just give you one line explanation of the same. Total asset turnover ratio is indicating that what is the sales of the company for every 1 rupee of the asset in which investment is made. So it is asset and sales. Asset turnover ratio is 2.50. It means that for every 1 rupee of the asset, sales is 2 rupee 50 paise. That is what this ratio is indicating. What is the value of the assets of the company? 30 crore. So we can say that the sales of the company will be this amount. So use your calculator. 30 into 2.5, that comes to rupees 75 crore. This is the first per keynote that say we need to prepare because the sales value is of course required. Variable cost is provided to us. It is 60% of the revenue. So 75 into 60%, 45. So contribution will be 30 crore. Minus fixed cost of 6, that will give the EBIT 24. So you have contribution, yes. You have EBIT, yes. You can compute DOL. That is what's provided to us over here. EBIT minus interest, that will give us EBT. So EBIT upon EBT, you will get DFL. Multiplication of both of them will get DCL. One more question is there, EPS calculation. So from EBT, tax is deducted at 40% to compute earning after taxes. The same will be divided with the number of equity shares, 75 lakhs. And that will give us earning per share. This is the way the earning per share is calculated. So the first part of the question. I request you to write down answer of the question. In that write down. Asset turnover ratio is indicating that what is the sales of the company, comma, for every 1 rupee of asset of the company. So the sales of the company for every 1 rupee of the asset is indicated as asset turnover ratio. In that write down, working note number 1, calculation of sales. So asset turnover ratio is calculated as sales upon assets. As far as the sales is concerned, it is found as assets into asset turnover ratio. What is the value of the asset? It is 30 crore. Into asset turnover ratio is given to us 2.50. 75 crore. That is the way we'll make the computation of the sales value in the first working note. Working note number 2, calculation of not working note but final, that is answer, calculation of earning per share. That is the answer of the first question. I request all of you to take down answer along with me. Sales value is 75 crore. Variable cost is given 60% of the revenue. So 75 into 60%, that comes to 45 crore. So contribution is 30 crore. The amount of the fixed cost excluding interest is given 6 crore. So that will give us earning before interest and taxes. It is 24 crore. Amount of interest 15 crore into 15%. That is 2.25 crore. That will give us earning before taxes. 24 minus 2.25, 21.75 crore. Income tax rate is given to us as 40%. So earning after taxes is 60%. That is 13.05 crore. 21.75 minus 40%, 13.05. No preferential capital information is given to us, so it will be divided with the number of equity shares. Number of equity shares are 0.75 crore. 75 lakhs have been given, so this 0.75 crore. So earning per share would be 17 rupees 40 paise. That is the way the EPS is calculated. I request all of you to take down answer for the first question. Try to do remaining 3 answers on your own. So that is the way the earning per share is calculated, 17 rupees 40 paise. The next 3 questions are calculation of all the leverages. So write down answer. Leverage. In that DOL, DFL and DCL. These 3 leverages are required to be found. Degree of operating leverage is contribution upon EBIT. The amount of the contribution is 30 crore and EBIT is 24 crore. So 30 crore upon 24 crore. Answer is 1.25. Degree of financial leverage is equal to EBIT upon EBT. EBIT is 24 crore divided by earning before taxes. It is 21.75 crore. 24 upon 21.75, that comes to 1.1034. And lastly, DCL, it is DOL into DFL. DOL is 1.25 into DFL is 1.1034. So 1.3793. That is the way the leverages are calculated. The question says that you are required to find, that is further past comment. As far as the comment is concerned, we can say that no industry information is given, neither information is provided for any other like the peer group companies information. So what we can write answer over here is very general answer that we can write, that the DOL is 1.25. So for every 1% increase in the sales, operating income will increase by 1.25%. DFL is 1.1034. So for every 1% increase in the EBIT, EBT will increase by 1.1034. EBT as well as EPS. And similarly, we'll have the comment for DCL. So I request all of you to write down answer. Comment in that write down DOL is 1.25, comma, it means for every 1% change in sales, EBIT will change at the rate 1.25%. Full stop. DFL is 1.1034. So for every 1% change in EBIT, comma, EPS and EBT will change at the rate 1.1034%. With paragraph write down, DCL is 1.3793. So for every 1% change in sales, EPS and EBT will change at the rate 1.3793%. Full stop. This is what we understand. So summary of the entire answer. In this question we have come across to a new word, that is asset turnover ratio. Asset turnover ratio is indicating that what will be the sales of the company for every 1 rupee of the asset. That is what we understand is asset turnover ratio. We computed the value of the sales using asset turnover ratio. Then EPS is calculated. Leverage as per the requirement of the question. And finally, we have passed the comment with respect to the different leverages.